Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We get the Dow Industrials up 114, NASDAQ up 32, S&P's up 16. Gold contract down $18.60, trading at $1,199 an ounce. Silver off 22 cents at $16.47 an ounce. Platinum down 21 at $1,212 an ounce. 217 an ounce rather. Copper off a penny and a half at $2.91 a pound. Light sweet crude down $1.82, trading out at $67.20. Bonds, we have the 10-year down 18 ticks at 126.11. 30 years off 1 full point at 141.01. And King Dollar, check this out. King Dollar is up 735 ticks at 88.92. It hasn't hit the continuous contract at the 88.80, but I expect more than likely we might see that. We might see it actually today. It's just off a few ticks. What is amazing, actually, is that with King Dollar up 735 ticks at highs, the gold contract has not got smoked, the gold equities have not got smoked, and the market has not gone to the moon. Euro's down 91 ticks, trading at 123.70. 9, and the yen is up 83 at 119.23. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We got a cash S&P right now at 2068.65. The high out there that was generated past Friday was 2075. The low of that high is 2065. And so if we close where we are right now, that it's saying the 75 will get tested. If we close 3 points lighter in the S&P, that's the test. If we take a look at the SPY, the SPY, we've done 56 million shares out here. The high that was generated, the first high out there had 142 million shares, so you can see what we have happening here. This is a day that there is no two ways about it. It should have volume inside it. It doesn't have the volume. We'll see if we're just going to do that test. But that characteristic is pretty intense, meaning 56 million versus 142. The way that's set up, let's say that we can do 66 million. We got an hour left in the market. You're still 66 against 142. NASDAQ, Dow Industrials. We're going to take a look at the Dow Industrials. Dow Industrials have made a new high. They're at the high right now, actually. We're up $1.18. We're at 984, and 984, I believe, is the high. 984 point, let's see. She hit 987. So the first high generated out here in November was the 21st November. That was 17,894. Second high was on Friday, 17,893. And right now we're at that level. We're at 892. Volume-wise out here, what we do have is that we are going to have one of the lightest days on volume this year, which is pretty amazing, because what you have, we are at 457 million right now. That'll come in about 650. NASDAQ Composite. Now, the Composite, folks, got hit pretty good yesterday. The Composite is up 32 bucks right now. We are at 47.60. It looks, if we take a look at the volume on the Composite, we're going to run about 1.7. Bottom line is that the Composite just doesn't have the juice underneath it today. NDX 100, we're doing 21 million shares. You're up 55 cents right now versus downtown yesterday of 35 million. The high that was generated out here on Friday had 17.3 million, but what you do have to do at 17.3 million, you got to basically almost double it to about 35 million. Let's say we'll say 30. Why? Because we had that half a day on Friday right before Thanksgiving. Gold contract. What do we have with gold? Gold is back $18 on light volume. That's after a monster expansion, wide price spread, all the above, a move higher yesterday with conviction. Gold yesterday had gone from a price point of $11.40 up to $12.22. We did 342,000 contracts. Today, you're really going sideways. with 153,000. What gold is doing right now, folks, is building cause. Actually, building cause to get up to the 1256 area, which was the October swing high, and then on up to the 1347 area, which was the July swing high. Silver also got some juice underneath it. Silver's going to need more juice, but it did get the juice, no doubt. Yesterday was SIH5. It's amazing that we're on the year 2015 now in the futures market. Silver yesterday, pretty extraordinary move. Silver went from a price point of $14.15 up to $16.81. We did that. Whoop this. We did that with 120,000 contracts. You're backing down out of here with 56,000 contracts. Silver also is building cause to get up to $17.28 and then on up to the $21 level. Big numbers out here. We go to the bond market. What do we have with bonds? So bonds yesterday, folks, got to a higher high, had decent volume, gave it up on price. We go look at the bond market right now, and bonds are also on the 2015 contract. We start with the 10-year. 10-year is down 1.1, down 18 ticks today. 1.1 million contracts, and that 1.1 million is going into 1.9. So you're backing down with lighter volume in the bond market. The 10-year yield is at 2.2% right now. We go to the 30-year. We take a look at the 30-year. What we have with the 30-year. 30-year is backing down 1 full point. You're at 322,000 contracts, and that is backing into 685,000. So what you have is that you got into the bar from October 15th, and you got into it with decent volume. You're pulling back with lighter volume. That's building cause to get to the top of that bar. The top of the 30-year bar is 146.16. Now, you know it's really interesting here, too. If you remember the last contract, the top of that bar was 148. We're dealing with a different contract. It's 146 right now. King Dollar. Let's go over to King Dollar, because King Dollar, folks, is the one out here today that is screaming. And what is when I say screaming, it is basically, no, not basically. It is given the most information in the marketplace. Why? King Dollar is up 741 ticks. We're at highs. We're at those highs, and the market itself is not screaming. Okay? That's the first part. We go to the second one, and we take a look at this continuous contract. We're 10 ticks off right now. Actually, it's 7 ticks off. Yeah. The continuous contract has hit 88.73 today. The high generated in June of 2012, in 2010 rather, is 88.80. I expect, with that close to it, that thing wants to get whacked. The divergence, however, the divergence with the dollar index going this high is that the metals market is not getting whacked. The equities inside the metals market are not getting whacked. They're red. There's no doubt there's red out there. But after the day that they had yesterday, you had some wide price spread, accelerated volume, had all of the above. You're pulling back with lighter volume. That's telling me that the dollar index, number one, doesn't want to test that high. Number two, it'll fail once again on price and volume. Our phone number is 877-927-6648. We take a look at some of the high-volume stocks in this low-volume market. You get Cypress Semiconductor up $1.37. Halliburton is down 90. Let's see. Microsoft is down 7 cents. ExxonMobil is up 207. Let's go over to the oil sector. We'll start with the XLE. XLE, oil and gas service sector that have the big animals in it. This XLE, folks, so you're up $1.12 today, $81.21, 29 million shares. This is building cause to go after the low swing point that was generated October 15th. This is going to be another ABC structure in the way down. These oil service stocks absolutely going to get smoked, and you do have enough buying that did come in there yesterday People were buying that dip, and I suspect it's going to be another ABC structure on the way down. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials up 114, Nasdaq up 30, S&P's up 16. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Tom, take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials up 105, Nasdaq up 28, S&P's up 15. And if we go over to these future markets, folks, we take a look at futures right here. As we're coming into this close, the future S&P, we were just at the 2068 number, and it's down like 3 points right now. So it's going to be interesting to see what we've had out here today. Is this since the open this morning, you've had 4 different surges higher. Each one of those surges, so the first surge higher this morning at 0930, volume-wise, what you had is this. You had 71,000 contracts in the E-minis. Well, the 71,000 was going into 79,000 from the downdraft that had been created yesterday. So that characteristic is pretty good, 71 to 79. After that point, however, you had zero juice. The way this market was acting as it got over those swing points is that the next surge that you had 55,000. That was at 10 o'clock. Your next surge had 35,000, which was at 11 o'clock. Your next surge at 120 was 32,000, and your last surge was right before I got on to 1440 with 31,000. Now, the way that baby sets up, okay, is that if we come off this level right here with an expansion of volume, what that is all about was pushing over the highs in the S&P, seeing what other stops were up at those levels, bottom line, trying to hit those stops before a larger operator sells into this marketplace. We go take a look at some of the Dow stocks out here. What you have with the Dow stocks is that we have American Express up 75 cents. You have ExxonMobil up $1.88. That's a dead cat bounce. Oxy's up $1.15. IBM's up 96 cents. You got Honeywell up 32. JP Morgan Chase is up $1. Walmart is up 19 cents. If we do go over and we take a look at the Big Blue, IBM, he's talking about a dead dog. It's been a dead dog in an extraordinary way. IBM just can't get off of this low. This low that we're talking about in IBM is the 161 level. Hit 160, 164 again today. That is building cause, and we've been building cause in IBM since October 21st, folks. That level, when you stay at lows for that long, it's a big problem. And listen, when you stay at highs at that level, that's when you can break topside too, and that's what the market has done. When you're staying at lows like this, it wants to go not only low but much lower. We take a look at Amazon. What you had with Amazon yesterday, numbers were coming out on Amazon. It pulls back. It has some volume on that pullback yesterday. It had got up into the gap where it had gapped down from. Right now, Amazon's at 325.70, and that has that high volume spike at 293. I expect that high volume spike will get hit. We go over to the small caps. Now, the small caps have continued to be the weakest indice in the marketplace. Small caps, the IWM today got to a price point of 116.64. We have 23 million shares traded. The downdraft of yesterday had 36 million shares traded. We'll see how this baby comes into the close. Thus far, coming into the close, thus far, it's a flat market basically coming into the close. The Nasdaq Composite, the Russell 2000 is saying lower prices are coming at us. It's surprising. I can tell you this. It's surprising, folks, that the Nasdaq cannot get higher, more traction. Yesterday, that baby come down with volume behind the move. The small caps in particular have been showing for quite some time that it is the weakest indice by far. We go over to that oil market. So let's take a look at oil. So oil, what we've had with oil gets toasted, roasted, all of the above. ABC structure on the way down. Your price point was 70. You hit 63. Right now, if we take a look at oil, oil is basically setting up for a bounce. We're at 67. Oil can bounce up to somewhere about 74 in a heartbeat. What you do have, though, and this is pretty wild, we are going to have a high volume low on a weekly basis in oil. And what that sets up is that sets up a test of that level. We take a look at Walmart. Now, Walmart has been on fire. Top side, Walmart today is trying to pull back slightly. It looks like it wants to fill a gap. The gap on Walmart, when it broke top side once again last week, was $85.11. And in the aspect of Walmart in 1 month, it's pretty amazing. It's gone from $72 up to this $86 level. Microsoft, MSFT, what you have with Microsoft is this. Microsoft right now couldn't hold higher price today. We're at 48 47. I suspect what Microsoft's going to try to do, and in fact, they just did it. No, okay, it's 47. Microsoft, another point lower, will basically set up, not a much lower price, but it'll set up a $42 handle. Microsoft right now is trading at $48.48. It's $47.57. That's the number. You get back inside that number, that'll generate lower price. We go to the XAU and the HUI inside the gold market. What you have is this. If you want to see a power move, folks, the XAU yesterday is pushing into its downdraft with 51 million shares versus 32 million shares. The XAU is showing signs of strength. The HUI simultaneously showing signs of strength. Both of them had extraordinary volume yesterday with price movement behind them. Downdraft in the Gold Bugs Index, the HUI, was 31 million shares. That's when it went from 174 to 164. Yesterday, what do we do? 41 million shares. 10 million shares more than the downdraft. That's building cause to get up and over the downdraft that was out there on the 30th of October. Because what you have there, it's not that that had been going down for a long time. Bottom line, that was the next leg down. And what you had inside that gold market was this. You had fast price destruction without volume on Sunday night when the markets weren't open, and thank God they weren't open. Well, the future market was open, but I'm talking about the equity markets. And then by the time that Europe opened up, Asia opened up. As soon as Asia opened up, it got a little goosing. Europe opened up at 1:30 Eastern Time. Gold goes higher. We open up, not when the futures opened up. When the futures opened up at 8:15 Eastern Time, it was a flat market, but at 09:30, that's when gold took off in spades, and bottom line, did not look back. Silver, same type of setup in silver. The move in silver, and we're going to be talking with our commodity expert, our man, Mr. Andy Heck, here in a little bit. The silver move was absolutely extraordinary. You talk about volatility. I mean, the volatility was in spades, but that silver move was just unbelievable. And I suspect what you had in there is that whether folks were selling into it, what you did have is that they took them all, and the people were on the wrong side. The bottom line is it looks like there were a lot of people that were on the wrong side of that market, and that market took off. And what you do have, folks, is this. What is so impressive out here today is this. Is with the dollar index up 745 ticks, and they can't smoke gold and they can't smoke silver, guess what? You can't bust them down, you're going to bust them up. 877-927-6648. Dow's up 102, NASDAQ up 26, S&Ps are up 14. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. The world of the markets. Let's take a look at it out here. We get the S&Ps right now at 2067. And the number that we're going to be looking at coming into this closeout here goes into the 6.5 number. What's the 6.5? What the 6.5 is, folks, is this. Is that is the low of the high that was generated on the Friday. Right after Thanksgiving. If we take a look at the SPY, we take a look at that SPY, what you have with the SPY. SPY right now is at 207.05, and that number is 206.91. Because what markets love to do, by the way, okay, when you're testing highs, they love to test, and then most of the time on a final test, they test the low of the high. So we'll see where this whole baby does shake out. What I do expect you are going to see here, though, is that as we come into these last 35 minutes into the market, U.S., ES, you're going to see this S&P basically move down. The real question is, do you move down 5, 6, or 7 points? That would be a big number on the way down. Why am I saying that? Well, what we have had is that you've had these trust forward from 0930 this morning, and at 2057 would be the number. You pull all the way back to there, that would be a reversal. That would be a test of that high. That's window dressing. That's the whole ball of wax. What that would set up is that would set up your next leg. Well, it wouldn't be the next leg down. It would be a leg down. What we did have last week is that small leg down that you had last week on the 19th, that had juice behind the move, meaning you came down with juice, you bounced again with lighter volume, and that we'll see how you end up testing that. What you have to remember is this. We have high volume swing lows out there from October 15th. They want to be tested, period. Okay? The oil and gas sector, that came down there with a vengeance. It not only came down there, it came down there with volume. If we take a look at the XLE, you did 51 million shares versus 69. Now, that's lighter, no doubt. What we will have, though, more than likely, is that you're going to have a test of the weekly basis with volume. Thus far, we've done 82 million, and that's going to be, well, it's still going to be a little light, but that's still way too much volume when you're testing a lower swing point. And the XLE, of course, is off $100 down to 81, and the correlation inside there, by the way, folks, what I thought was really interesting. Different people do have different definitions, but when you're off 20% off a high, you know, that's a real downdraft, no doubt about it. I heard a few folks thinking that wasn't into bear territory. That's into bear territory. You come down 20% off a high, you're getting into a very dicey situation there, because what happens technically is that you've broken just about every type of trend line that people like looking at. And there's plenty of trend followers out there that you start breaking those lines, well, guess what? You're going to have to break them to the top side in order to have buyers come back into your equity. And, you know, can that happen? Absolutely it can happen. You know, we'll see where the whole thing does shake out. Let's go to General Electric. We take a look at GE. GE is trading out at 26.08. Now, what GE did is this. GE came off its highs once again with volume. You know, when we came down yesterday with GE, it was pretty extraordinary. Friday, on a half a day, you had a wicked expanded volume, 31 million shares after making a high with 36 million in three and a half hours. Then what do you have? You have follow-through. Yesterday, we came down with 48 million shares. It tried to get over the high of yesterday, today. 17 million shares. GE, more than likely, is going to be the next one that goes attacks its October 15th low, which is $24. And we bring this back. We'll put this on a weekly basis. On a weekly, it's broken everything. That October 15th level basically really took GE apart. We take this on a monthly basis. We'll put it on a 10-year monthly. And what we have on a 10-year monthly is that GE, the high of 2008 is 42. GE did the counter trend bounce, got to 28. That was in December of 2013. And bottom line, it hasn't done much since. Nothing to the top side or the downside. So we will see how GE performs in the next 3, 4, 5 days. In this particular case, it looks like it's doing a larger ABC structure on the way down. That, by the way, when we talk ABC structures, many of the gold equities are actually doing an ABC structure on the way up. So it's going to be intriguing to see how they come into their B point. We do have divergence in that market also, meaning that there are some gold equities, few silver equities that didn't perform yesterday. If you have an equity in the metals market, folks, that did not perform yesterday, you want to do some thinking about it and get a stop really close. Why? Because the majority of gold equities, silver equities, moved higher with volume and wide price spread. And you don't want to be on the other side of that, meaning that if your equity didn't move higher with that type of price spread, that's a heads up in a big way. Uber Technologies, folks, is on a roll. There's no two ways about it. It's going to be amazing watching. Now, I've never used that service, that car service, but what you do have out here is that thing is not only rocking and rolling, meaning the amount of money that they're raising right now. What you do have is that disruptive technology is taking place in an incredible way. Citigroup came across today and said, okay, all their employees now can use Uber. That's going to basically put a dent in New York City in about 2 seconds flat, because the rest of the investment banks will more than likely follow along. And then on top of that, what you had is Carlos Slim, which is one of the richest men in the world. They just teamed up with him, and they're going to be doing business in all of South America. So bottom line is that we're going to see, you talk about, you know what's interesting about that is that when you think that there's certain certain sectors that never could get hit, meaning if you know anything about the taxi cab business, the medallions are worth big money, especially in cities. Bang, just like that, guess what? The whole thing changes, and it changes in an extraordinary way. So that's something you want to keep an eye on, and it's pretty amazing watching how this whole thing does shake out. We take a look at some of the. You get Kinder Morgan. Kinder Morgan is up 75 cents. Let's go take a look at Kinder Morgan. Now, this yesterday, this is really interesting yesterday. This is a pipeline, and even with so this is a natural gas pipeline, gasoline, crude oil. Bottom line is that this is still a strong stock in a market that, the oil service sector itself got absolutely smoked. But evidently their rents for that pipeline are going to be fine. It has a high volume swing point at 42.49 that wants to be tested. It pays a 4.22% dividend. If we do look at the bond structure across the world right now, bonds are still very inexpensive, folks. Okay, WB. There she is. So the 10-year in the U.S. is paying 2.2. That is still high in correlation to what the world is paying. France is still only paying 1. Germany 0.7%. Italy is at 2. It's like, really? Italy's a great place to go, but you're going to lend money to them at 2% when the United States is 2.2. Spain is at 1.8. If you remember, Spain's bankrupt. Portugal's at 2.7. Sweden, well, that makes sense, 1. Greece is at 7.5. Yes, so Greece at 7.5 is still saying that is an absolute mess. There's no two ways about that. It's big time too. We take a look at the volume out here today. What we are going to have, it looks to me that price is not going to hold, volume's not going to be there. We'll see where this rest of this market does shake out into the next 20 minutes, coming into the next 20 minutes. You have the SPY. The SPY itself, for a real failure, it would have to come down about another 50 cents. We're at 207.03. It'll be 206.54. NDX 100, that little baby just can't get traction. Right now we're at 105.22, and that couldn't even make it to the highs that were out there yesterday. The small caps continue to be the weakest indice out there. Small caps right now, they're up $1.26. Last time they had any juice was down there at 115.09, and I expect as we start coming into that close, you're going to see these markets get slightly weaker. Dow Industrials right now up 97, Nasdaq's up 26, S&Ps are up 14, gold down $19, silver off 23 cents, platinum off 21 bucks. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 91, NASDAQ up 23, S&Ps are up 13. And don't forget, folks, at TFNN, every trading day, live programming, 8 o'clock in the morning to 6 o'clock in the afternoon. You can get all of that right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, right on your cell, go to TFNN.com. You're still going to see the TV on the top right-hand side. Hit that. You're going to get the audio plus the video. Now, as you're over there, what you're going to see right in the carousel is a free webinar by the John Logan, who kicks us off every trading day. That webinar, folks, is going to be on December 9th. That webinar is all about the TAS Market Profile Scanner. This is a professional market scanner. It analyzes sectors, markets in multiple time frames. It's an amazing piece of software. If you do listen to John's program in the morning, every morning at 8 to 9, you know that he uses it every morning. Go check it out. It's a full month you can use it, absolutely free. When you're using it, you also get into the webinar, and what the webinar will do for you, as John's going to walk you through exactly how this should be used. It's a very powerful piece of software. It's free. Test drive it. Check it out. You can use it right here, right now. Let's go over and we take a look at the GDXJ for one of our Tigers. Now, the GDXJ, folks, are the juniors. This is the Gold Miners Junior ETF structure. The low is $22. The high is $46. And we take a look at this. What you have is this. So we have a low that was established at $22. You come off the low, and we've had 3 separate signs of strength. And this is how most of these are set up. You had a sign of strength in November 7th. You had an additional sign of strength. We had 2. Yeah, we had 2. Okay. So we had one the 7th, we had one the 14th, and we had yesterday. This is a tough one, and what I mean by that specifically is this, folks, is that the junior miners, a few of the junior miners look to me like they are in trouble. If I take a look at what's inside the GDXJ, what you have is there's nothing that really pushes out at me. Torex Gold is the largest weighting structure at 5.7. You get China at 4.5. Rio Alto 6.3. Bottom line is that I wouldn't be buying this right now. And what it is, it's how it's coming back into the swing point. This is what the difference is. And when I was doing the gold report today, I could see this inside the juniors. That what you don't want to be into if you're in this metals market, folks, is this. Last Friday, your equity should have come down on dramatically lighter volume. And then yesterday, go up on monster volume. What we have in the GDXJ is it came down with 28 million shares on Friday, which is just insane because that's only 3.5 hours. And then we went up with 31 million shares. Okay? It should be just the opposite. When I say just the opposite, watch. If we take an Eco-Eagle, we take a look at an Eco-Eagle. What happened on Friday? You come down with 2.3 million. Yesterday, you go up at 4.5 million. You go look at Gold Corp. There's real consistency right across the market, folks, okay? With Gold Corp, you came down at 6.3 million shares on Friday. Yesterday, you go up with 11.9 million shares. That's the type of relationship that you want to see. But we absolutely have divergence out there, and I appreciate you having me bring that up, Z, because the divergence is out there. There's a few of these stocks that are in big trouble, and I suspect what that is this, folks. If you don't have a cash flow, and we are in a bad market, meaning a metal market to raise money, that is trouble. The only way that you always, well, not always go out of business, but the way companies go out of business is their cash flow stops. Many of these companies, exploration companies, there's not large cash flows, and if the expenses aren't cut quick enough, it's a problem. So if you're going to be in that market, get the strongest one that you can probability-wise. And the probability-wise, goes, as I just said, that on Friday, it's pretty clear, folks. It's really clear that on Friday, when that pullback came in, you know, there's many of these equities that had really light volume. Then you get that explosion to the top side yesterday with the wide price spread accelerated volume. That's a good move. And what actually happens is this, is that the move going lower on Friday will actually tell you more than the move higher yesterday. Because the way that this downdraft has been going on for a longer period of time, the lower volume on the pullback is telling you that the selling is subsiding inside the marketplace. That's the big number. Dollar index, which is amazing out here, folks. Dollar index is at these highs, going to close up at these highs. And if we do take a look at the continuous contract in the dollar, we haven't hit the 2010 high, 88.80. We're 7 ticks away from it on a continuous contract. I do expect we're going to hit it. Now, with that being said, what also is happening is that I expect that dollar is going to fail at this price point. Why? Because the market itself is not screaming higher. This market has loved a strong dollar. A commodity market couldn't stand a strong dollar. You can't blame them. What you do have happening inside the commodity market in general, outside of gold and silver, is that it's getting hit pretty good. You get gasoline down 6.5%. The gasoline market, so check this out. This is going to be really cool, folks. All of us, unleaded gasoline, right now, you're going to see unleaded gasoline at probably about $2.10. Pretty amazing. Right now, we're at 181, and we have 53,000 contracts traded. That's monster volume. So that's saying that unleaded right now, 244. This is going to be crazy, actually. 192. That's 50 cents. Yeah, this is saying that this contract here is going to be basically running down to $1.60. You get $1.60 unleaded gas, that's going to be insane. $1.60 unleaded gas is going to put unleaded under $2. That's going to be pretty amazing. If we go over to the crude looks to me like it's bottoming out right now. So this is going to be pretty wild watching how this shakes out. What I do expect, crude is down 169 right now, but the volume is way too light. Yesterday we did 504,000 contracts. Today you're only doing 338. That crude wants to bounce, which totally makes sense, by the way. This is Tom O'Brien. This is TFNN. You stay right there, folks. Somebody coming right back, coming into these close. Dow Industrial's up 98. NASDAQ up 27. S&Ps are up 14. Gold down 20. Silver off 24. Platinum down 22. We're going to be right back, folks. The S&P in general. With the dollar going up so dramatically, this market should have had a lot more juice underneath it. Now, let's go over and take a look at that gold market. What we have with gold is this. You go back to last Friday. Last Friday, half a day, you had gold drop down. Gold was trading at, on Thursday, we're at 1197. Friday, it pulls back to 1163. Over the weekend, Sunday night, gold opens at 1140, 1141. Rejects lower price, goes topside, closes at 1220, closes at 1218, goes to 1222. Does volume out there of 342,000 contracts. Today you pull back with 155. If that was an awesome test of the last swing low out there, the last swing low November 7th, with lighter volume, never made it to the lows. And that's what's important to wrap your head around also, is that when we came down, folks, as we pulled back, it had lighter volume, never made it to the swing low, and then come off that swing low with wide price spread accelerated volume. We go over to the oil market. What we have with oil is this. Oil came down hard, cracked hard. Oil today pulled back 165, but oil's building cause to get into higher price. You know, oil's been one straight line move down, 102 to 66. That's pretty amazing. No, to 63. 102 to 63. That is a big number. I expect you to see some kind of a bounce out of that. Bonds. We have inside that bond market, Bonds also pulled back today with lighter volume. Well, it's lighter volume of what they're going into, and that's absolutely crucial to really understand. The 10-year right now is at 126.10, and where it had its sign of strength on the 25th, the low of that is 126. We had done 1.9 million contracts there. Today we did 1.1. 30-year is the exact same type of setup, meaning we're pulling back into the sign of strength in the bond market, and that sign of strength that we're talking about had, on the 25th, you had volume of 685,000 contracts. You're pulling back into that with 340,000. So it's a nice low volume pullback into where that strength was. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Let's go to the world of some of the high volume stocks in this low volume market. We had Bank of America up 36 cents. Cypress Semiconductor, that got some real juice into it. That was up $1.40. Intel was up 42. Pfizer was up 31. Sprint was down 15. We had Freeport McMoran off 33. We get into look at some of these Dow stocks, and what we have inside the Dow is that you had Caterpillar up 51. Exxon was up 184. Honeywell was up 46. IBM was up 113. The movers inside the Dow Industrials were Chevron was up $2.29. You had ExxonMobil up $1.84. J.P. Morgan Chase was up 108, and 3M was up 244. Taken away from the Dow Industrials, even though the Dow was up, you had Marvell down 77 cents. Verizon was off 92. Home Depot was off 25, and Big Mac McDonald's was down 67. The NDX 100, what was the strength inside the NDX 100 versus the weakness? Strength inside the NDX 100 was TripAdvisor up 564. Biogen was up $19 at $328. Alexa Pharmaceuticals up 8. Netflix was up 10 at $350. Taken away from it on the way down, you had SBA Communications down $381. Dish Networks was off $187. Vipul Communication was down $12. And Monster Beverage was off $172. What I do want to do is I'm going to go to the IBB, because this IBB up $6 today. This is the biotech index, the NASDAQ biotech index. And this is intriguing because what we do have is this. So it's at a high, and the biotech index itself didn't even get hit yesterday, and this market got toasted. The index itself is at 306.87. You hit 307.67. I have to wait for another test of this high. When this index falls apart, folks, the NASDAQ goes south, and goes south very quickly. The XLF, we take a look at the financial sector. XLF today basically looks like it's going to go test that shooting star, 2450 or 2445. This is Tom O'Brien. This is TFNN. As you come over to our website at TFNN, folks, you're going to see right on the front page our man, Mr. John Logan. John is doing a webinar. This webinar is coming up. It's all about the TAS Market Profile Scanner. It's an outstanding scanner. You can test drive the scanner. $95 value, 1 month, absolutely free, and get his neck.
The economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 102, NASDAQ up 28, S&P's up 15. Now let's go over to our man, Mr. Andy Hecht. Don't forget, folks, every Tuesday, Thursday, Andy does an outstanding show right here at TFNN, 5 to 6 Eastern Standard Time. He also has a great newsletter. It's the Technomento Commodity Report. You can test drive it right here, right now, 1 month, absolutely free. The way you do that, go to TFNN.com. As you go to it, you're going to see, go to newsletters, go to trading newsletters, test drive it right here, right now, 1 month. Andy Hecht, what's going on?
How you doing, Tom? Did you have a good Thanksgiving?
I did. Yourself?
Yes, very good. Thank you. Very good.
I know.
Before we get into commodities, I just wanted to remind everyone and just discuss with you a little bit. You know, tomorrow's the deadline on this Everbank market-safe brick product.
Yes.
And it's closing tomorrow. And this product, I really like this product. What it is it represents 5 different currencies, the brick currencies, the Russian ruble, the Brazilian real, the Indian rupee, the Chinese RMB, and the South African rand. And it's basically a kind of a 3-year bond where there's absolutely no principal risk. And I like it because, you know, it represents consumer and producers of commodities, countries that consume and produce. And right now, those currencies are pretty weak. So it's a great way to put some money up, take absolutely no principal risk, and for the next 3 years have some exposure in your portfolio to these interesting currencies.
Yeah, there's no doubt. And what you do have, as I was talking about even the first hour, folks, it's intriguing that our own dollar index, okay, is at highs. And, my take on this is that when the dollar index goes up 700 ticks, normally the gold should be down $40, $50, $60. Bottom line is that gold had that huge expansion yesterday. It backed off $19 with light volume. And that's telling me that the dollar is topped out for a bit, So, as you're looking at this product, bottom line is that if you're looking for a product that has principal guaranteed that you get back, it's a great product. If you come over to our website at TFNN, you can hit that banner. That'll bring you over to the Everbank site, and you're going to see a lot of different products that they do have there. The product specifically that Andy and I are talking about is the brick product. And so, as you do that, I believe that the actual initial investment can be as low as $1,500. So.
Yeah, I was gonna add that, Tom. I mean, it's they have a lot of very interesting, innovative products, and the one thing that I kind of like and respect about Everbank is that they make them available for pretty low minimum amounts. Whereas if you go and try to buy a product like this from some other larger banks, you got to put up a lot of money to do. These are only available to really their high net worth individuals, but Everbank makes them available to everyone.
Yeah, there's no doubt. There's no doubt. And it's going to be intriguing to see, we're talking commodities, is this, dollar going to continue higher, or are we at a space that is, the commodities want to move? It's interesting.
Oh, absolutely. And let me tell you, it's wild, man. It's volatility with a capital V. Where do you want to start?
Actually, I want to start HTZ with copper.
Okay, yeah, Dr. Copper. I gotcha.
The Dr. Copper. So, let's see. So let me see. HG, or it must be on HG.
Okay, I mean, I'll start you off here. After the OPEC meeting, when everything got hit last Friday, while we were kind of laying back and nursing our bellies after Thanksgiving, copper broke through the March lows. We went down to 277.75, made a new low for 2014.
Right.
And then, like everything else, on Monday, we bounced back hard. But copper is telling us, copper is under a lot of pressure, and copper is telling us that, things in the global economy ain't that good.
Yeah. Well, watch this. This is going to get interesting, Andy. So the highs, folks, of October of 2008 and the continuous contract is $2.93 a pound. And that's when, copper absolutely, just like anything else, everything got killed, folks. Copper, went from $2.93 all the way down to $1.25. And that wasn't the high. The high was through $4.37. But this one, last night, I was watching China trade, right? And this is where I'm coming from with this. So check this out, folks. And I'm thinking on the go here because when I saw this last night, I hadn't done the work yet, and I figured, well, Andy's going to be on right now. This is the perfect time to do it. The Shanghai market, folks, okay, went topside with volume last night. So it's like, oh, this is interesting. So what's happening here, right? So Shanghai goes up about 3% last night, has the juice behind the move. And so I'm looking at this, I'm saying to myself, okay, is Shanghai, we're at 2,700. Is Shanghai going to make a run for 3,400? And now, Shanghai hasn't been able to get out of its way, folks, since 2007. But I'm bringing this up, Andy, because it's like, whoa, we know that copper's all about Shanghai, right? So it's
right, absolutely. And Tom, it's a great point. I wrote an article this weekend. It was on Seeking Alpha yesterday. It's called it was all about copper. And I said in the article that there's two things going on in copper. One thing is Red Kite, a big hedge fund, $2 billion plus hedge fund in London. They're long copper up the wazoo.
Okay.
So they had a pretty bad Thanksgiving weekend, and they have they are, and from what I hear, they're short gold against that long copper.
Okay.
So they're kind of having a real rough time here. But the conclusion to my article was that copper depends totally on the Chinese.
Yeah.
They are the demand side of the equation in all commodities, but particularly in copper, because it's the one place that's really building infrastructure.
Yes.
So the question becomes, do the Chinese step back and wait for copper to plummet to walk in and buy, or are they going to support the market around here because they think it'll run away? The last time we came down in March, you might remember that the Chinese came in and bought a big Peruvian copper project, Las Bambas, from Glencore Estrada.
Right.
And that kind of stopped the fall. Now, this time, I don't know. I'm not so sure because, with the dollar so strong and all commodities being hit, and believe me, it's not lost on the Chinese what happened to oil.
No, that's right. And folks, I wouldn't be going after copper yet because this is where the divergence is. If we go over and we take a look at Southern Copper, SCCO, that is a trade at $29.68. Now, that's the largest copper company in the world, okay? It happens to be a U.S. company, but bottom line is, and that wants to go test its swing low of like $27. So.
Oh, I don't think. I think we're going to see more pressure on copper, particularly because the whole world knows that this big hedge fund is long, and they're not just long, a little bit. I think that what I hear, through the grapevine and through what I read, they could be long 80% of the LME stock. That's like 140,000 metric tons. That is a massive position.
Yeah, no
and
doubt.
You know what happens, when the market wants to run someone like that in. The Chinese could say, hey, we'll buy when they bail.
Yeah. Now, when we talk about position limits, right, isn't there limits in the copper market? No?
Well, there are limits. However,
I'm with you.
In the physical market, if you buy and you put up cash.
That's it. I got it.
That's what it is all about, baby.
You stay right there, folks. Tom O'Brien, Anti-Heck. We're going to be coming right back. And don't forget, coming right up after I'm off today, 5 to 6 Eastern Standard Time, Andy has an outstanding program. Dow up 102, NASDAQ 28, S&P's 15. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. ExxonMobil is up $1.84. You had Oxy up 124. Big Blue is up 113. We're talking with our man, Mr. Andy Hecht, and we are talking commodities. So, you know, and when we talk commodities, there's no doubt, let's talk oil here.
Absolutely. And I mean, just to finish the last conversation on copper, we have to keep in mind, copper production cost just dropped dramatically because of the oil price drop.
Okay.
So, you know, that's important. I mean, I listened to your first the first hour, Tom. I couldn't agree more. I think that the world is getting too damn bearish on oil here, and I think that we're gonna get a pretty sharp technical bounce pretty soon.
Yeah, no, I agree. You know, oil, folks, was a one-way road here. You know, 102 down to 63. It did what it's supposed to do.
If you look at the continuous contract in June, we were 107.73. We have gone straight down.
Yeah.
I mean, without a stop, really. I mean,
no, exactly.
So what you're seeing now is you're seeing. You know, all the oil producers, there are winners and losers here, and clearly, you know, some of the losers, biggest losers, are the oil producers. So you're seeing a merger between Baker Hughes and Halliburton.
Yes.
And today you're hearing rumors of a potential merger between British Petroleum and Royal Dutch Shell, that they're in conversation.
That'd be crazy.
That's, you know, that would create a mega company. But that, you know, these companies have a lot of money invested in this oil sector, and at these prices, you know, those investments are not looking as pretty as they were 3 short months ago. You know, the big winners here, Tom, first of all, U.S. consumers, big winner. Huge winner.
Yeah,
big tax cut. China, huge winner. I mean, China's a huge winner. But if we look on the other side of the coin, who are the losers? Russia's a loser.
Yeah.
You know, the producers who are in the shale area are losers. Iran is a loser because, you know, they're under the reason that they're sitting down at the negotiating table these days is because they're under tremendous economic pressure. Lower oil prices just increases that pressure on them. And we have to remember that oil, you know, other than the most important commodity, is also the most important political commodity. So very, very interesting action. The fact that OPEC did nothing last Thursday was kind of an average of half the market analysts thought that they would cut, and the other half thought they'd basically do nothing. So, the people who thought that they'd do nothing were right, but the market still tanked on that news because there was a feeling that the Saudis would give way to some pressure from the poorer OPEC countries like Venezuela, like Algeria, and like Nigeria, but they did not. And those countries are big losers here.
Yeah, so, you know, what gets intriguing here is that, do you think that the Saudis and the price cut, well, it wasn't a price cut, they just didn't do anything. Do you think that has anything to do with actually destroying the price of oil so, in fact, you can drive out producers?
You know, they did that in 1986, Tom.
Yeah.
They actually, in 1986, the Saudis put the price of crude oil at $9.75 a barrel.
Right.
I mean, could you imagine? They just pumped, for 4 months, they did nothing but pump crude. And, you know, for the Saudis, it's like you going out in your backyard and turning on the water, you know, spigot.
Yeah, exactly, right.
Right. So, yeah, I mean, their production cost is pretty low. So I think that this is very coordinated. I think that in the modern world, the world is much smaller, and there's much more tension in the world today than there was in 86.
Yeah.
And certainly Saudi's biggest worry is ISIS. Because ISIS has their targets set. They have the Saudis in their crosshairs because of all of the religious sites in Saudi Arabia and the fact that the country is run by a family, a royal family, which is kind of against what the whole principle of what ISIS is fighting for in the Middle East.
Sure.
And, you know, I think that the Saudis know that their last line of defense is the United States of America. So I don't think that the Saudis did this in order to destroy our energy independence.
Okay.
I think that this is a much more coordinated political action here, and I do think that the crude oil price is going to bounce.
Yeah. No, it looks to me like you get a bounce, and you can, folks, get a decent bounce going, too. So it's going to be intriguing watching that shake out. You
know, when you do fundamental analysis for commodities, it's kind of easy to do it in something like, let's say, silver, or it's kind of easy to do it in something like hogs or cattle or corn or soybeans. When it comes to oil, there are so many political factors that just trump the actual nominal price. You have to take those into account.
Yeah, there's no doubt. And, you know, if you remember a few months ago, we were talking about one of your former associates from years ago, Andy Hall. Well, the bottom line is that, you know, this guy, folks, is one of the best traders in the world, period. And
he's under some pressure here.
Oh, he's got to be under huge pressure, man.
Well,
I know.
Huge pressure. Let's examine how huge that pressure is.
What does that mean?
Because he's long the deferreds. And, you know, crude oil in the front came down, you know, huge. I mean, what are we?
But the deferreds have not come down as much, right?
We're $40 a barrel lower. He's down about $10. I mean, still enormous. It's still enormous, and he's leveraged and all that. But, you know, look, if he didn't sell it, which I don't think he did. I kind of know his style. I don't think he did. I think he's just kind of sitting on it.
Sure.
I think, you know, it's mark-to-market loss that can come back very quickly.
Yeah,
and if oil does start to rally, it's the back of the curve that will rally.
Yeah. So let's talk gold.
Let's talk gold. Hey, you know, that was one wild ride after the Swiss referendum.
Yeah.
They came out selling like there was no tomorrow on a Sunday night.
Right.
And they got, as you would say, roasted and toasted.
Yeah. And thank God our markets weren't open, folks.
Oh my God, really? I know. I mean, I actually in my service I'm long some silver ETFs, and they would have definitely have been stopped out, but they weren't open, so they weren't stopped. And when it opened, it was much higher. A huge bullish key reversal yesterday. Actually, really good action today, considering the dollar's up 721 points.
Oh, it's huge. It's huge.
I'd say, Tom, this is shaping up as an epic battle in the gold market between longs and shorts. And at the end of the day, gold ain't going nowhere.
Yeah. Well, we're gonna
now.
We're going to find out quickly.
We will find out quickly. But, hey, across all these markets, volatility with a capital V and traditional things that move markets are not necessarily doing that. Let's look at natural gas. Last Wednesday, the EIA put out a massive withdrawal. They were expecting 150 BCF. It came in at 162 billion cubic foot withdrawal. And what did natural gas do? It went straight down.
Right.
It went straight down because the weather warmed up a bit. But things are just kind of reversing on themselves. And I think that a lot of traders are getting chopped up very badly here. We see a lot of hedge funds closing, especially commodity-based hedge funds, because it's very hard to move large sums of capital in and out of risk positions in these markets. The markets are just chopping these positions to kingdom come these days.
Yeah, and what Andy just talked about, folks, is it Broward? There was a big fund.
Yeah, Reverend Howard.
That closed yesterday. That's a big fund, folks, okay?
Yeah.
Now, what I saw is that the good thing is when that happens, well, guess what? They've closed, they've been winding this thing down, and if I remember anything, which blew my mind, is that when I caught onto the gold market in 2001, is that Merrill Lynch had one of the best commodity desks, period, okay? The desk out in London, right? And they closed it. It was like, I says, oh, my God, this is it. Commodities are going to go to the moon. And what happened, folks, because we know it did, they went to the moon, and Merrill Lynch ended up opening their desk back up in like 2006.
And then Merrill Lynch, we all know what happened to Merrill Lynch in 2008.
Yeah, I know. It's just fun. No, and they still, but their commodity desk in London is still amazing, man. There's no doubt. I mean, and what happens, folks, is that there is some folks that just know commodities upside down, and it's interesting that it's the desk in London versus the desk in the U.S. But amazing desk. Period. But when they closed, I says, "Oh my God!" And what happens, folks, is just crazy how that happens. But that happens a lot. It happens a lot in the marketplace.
Absolutely, absolutely. And commodities now, Tom, in my view, because they're so choppy, they're becoming very good day trading instruments. But hey, don't forget to take your profits, and don't forget to trade with tight stops.
Yeah. And there's no doubt about it, because if that's definitely a huge deal, no doubt.
You got to take your profits here, because you know what? Looking at the gold market, if you were short Sunday night, you went to sleep feeling really good, because it looked like that thing was going to $1,000 straight away Monday morning. You woke up and the thing was $30 higher than the close.
Yeah, and a couple hours later it was 50, 60, 70, I know.
Exactly. Very tough. People are getting chopped up, so be careful. Even if you're trading these ETFs, take your profits, trade with tight stops, be careful out there.
And listen, folks, you're going to be able to listen to Andy in another 15 minutes. He's going to be coming right up 5 to 6 Eastern Standard Time. You can test drive his newsletter right now. Go to TFNN, newsletters, trading newsletters, the Technical Commodity Report. Andy, thank you so much. Have a great one, safe one. Look forward to the program in 15 minutes.
Thanks, Tom. Talk to you soon.
Stay right there, folks. Coming right back.
Grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien. Welcome back, folks. Dow finished up 102, NASDAQ up 28, S&P's up 15. Let's go to Nick in Illinois. Hey, Nick, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. Thanks for calling. Thanks for holding. Appreciate it.
Oh, yeah, no problem. So I started investing in the market right around October 16th when that big dip happened. And, I'm a young investor. I'm 29. I'm just getting in. And I really wanted to try to stick to just the 5 stocks, diversified 5. But Man, they're so addicting. I found myself, I have 13, and I need to trim down to those 5, and I'm just having a hard time deciphering, what I should get into.
What sectors are you in?
I have a little bit of everything. I can just sort of run through what I have real quick.
Yeah.
I have Apple, Alibaba, Berkshire, Disney, Facebook, Macy's, 3M, MPC, Pepsi, Starbucks, Union Pacific Corp, and Walgreens.
Man, that's a nice portfolio, man. There's no doubt about that. That's a fact. I guess it really, if that's what you want is 5, then you're just going to bring them down, man. Depending what I'm looking. Let's see. So you got
Apple. Alibaba.
Yeah, Alibaba. I think Alibaba is, it wants to go low, but that's going to be a big winner, man. That'll be the last one I'd try to get.
Well, I picked my first 5, and I did really, really well. I had Buffalo Wild Wings. I bought it at 127. I let go at like 158.
Yeah.
And then, I had Facebook. It ran up. I sold it. I rebought it. But like Berkshire, Disney, Facebook, Macy's, and Pepsi, and Walgreens. I've had those 6, and they've all done really well. I'm sort of trying to see what my exit point, with Walgreens and Starbucks is. I've noticed that, like, maybe I've gotten into it more as a trader, and I want to be more like a long-term investor, with maybe having like 1 or 2 stocks that I think potentially could have a really good upside. It's just, with gas going down, that's why I have MPC, and I have Union Pacific. They both got hit the last couple of days super hard, but, bounced back pretty much. I guess I could just ask you, do you think, Marathon Petroleum and, Union Pacific, those are good companies to have right now with oil going down and, Marathon being a refinery and Union Pacific being a distributor, a transporter?
Yeah, well, Matt, I would say, Marathon, can get to $80 pretty quick, and you're at 94. So that's a problem for sure. Union Pacific, we're at 118, and I wouldn't be hanging there either, man. That come off the highs with monster volume. It made a high with 4 million. Someone's bailing. You come down with 5 million, and then yesterday you had 7 million.
And then, okay, what do you think about having 3M? A lot of these I notice are at their 52-week high or just about.
Well, the whole market is. Yeah, the reality I like how you. Okay, 3M I'd stay into. 3M can pull back to 148, but on a longer-term basis, 3M wants to go a lot higher.
Okay.
What do
you think about?
Well, what you have to do is this. You have to figure out. You said something at the very beginning that is real, and it's a telltale that, you're in the market now, and I would pull back some of these equities. And what you had said is that, you started with 5, you're up to 13, and it's really addicting. And that's what does happen, folks, in the marketplace, okay? And when that happens, 2 different things end up happening. It's great that you recognize it, though. What happens in that aspect is that that's bad because you want to be in the market to make money, not to be the addiction part of it. So,
I feel like I almost have like a mutual fund, and I just want to get down to my 5 investments.
Yeah, so just do it. I'd just sit down with some paper, man. Well, what I would do is this. You're up huge money. Bottom line, I'd clean half that portfolio. You have half the cash. Get down to 5 equities again and kick back, and you're going to have a clean mind. The hardest thing in the market, folks, is to have a clean mind. And what does happen, remember I used to always close the show with, and thank God there's always another trade. There's always opportunities. Don't think for 1 second that this is the one opportunity. If you don't get in now, you're going to lose everything. You're not going to make it. That's not how it works. What happens is that there's always opportunities. The bigger portion is to make sure that you have your cash, that your money management is in place, and that you have a clean head, because your head is more important than the bread.
Do you have, out of this list, I mean, do you have a 5 right now that...
I would take that. I love Alibaba. I can tell you that, man. To me, you're talking to someone that thinks the market's going to pull back right now. But on a longer-term basis, Alibaba, I think, is going to basically have some huge disruption in all, in the Googles of the world, and not maybe, the eBays of the world, the Amazons of the world. They're gonna basically do some disruption. There's no doubt about that, man. Berkshire Hathaway is way overpriced right now. Berkshire Hathaway needs a few hurricanes coming down the peak in order to get up into heavier money. And what also has happened, of course, is that with Berkshire Hathaway, they're into the rail business right now, and that rail business could get pretty dicey. That whole rail business is predicated right now on the Balkan Shield, meaning all that oil, they've pushed off commodities to have oil come up. So those rail companies in particular are going to basically get hit because cheaper oil, that means they're going to be pushing less oil across those rails,
Okay.
So hey, let me ask you something. Yeah. When you first got the first 5, what made you pick those first 5, and what were they?
I guess I just started watching a lot of CNBC.
Okay.
I read a lot of Jim Cramer's books and stuff like that. So I mean, between CNBC and him, I just sort of took the best 5 that they talked about. I tried to have it diversified.
Okay, good. Have you taken any profit yet?
Any what? Profit?
Yeah.
Yeah, I mean, I got rid of Buffalo Wild Wings when it ran up. I got rid of 3M when it first ran up on the earnings. I think that just, like you were saying, you just try to jump on every opportunity, and you don't necessarily need to.
Listen, go out, 2014 a winner. So go take some more money. Take some more money. Take your girlfriend. If you're married, go take her out. Have a great meal. If you get a wife, take her to the Four Seasons. And you got some kids, go buy them a bunch of electronics, man. Thanks for calling. Have a great one. Have a safe one.
Buddy. Thank you.
Stay right there, folks. Our man, Mr. Andy Heck's coming up next.